Welcome back to the channel. Today, we're diving deep into some truly fascinating and, frankly, unprecedented movements in the precious metals market, particularly silver. What we're witnessing right now suggests a seismic shift in our financial landscape, hinting at a potential collapse of the dollar and a re-emergence of gold and silver as the ultimate forms of money. If you're not paying attention to what's happening in these markets, you could be missing out on the greatest wealth transfer of our lifetime. Let's start with COMEX silver. For months, we've observed an unusual trend: massive quantities of silver flowing into the COMEX depositories, particularly into New York. The speaker highlights that this isn't driven by typical retail demand, but by what he calls big whales, who are actively stacking silver. These are not your average investors. These are entities accumulating huge 5,000-ounce bars, pulling this silver offline into cold storage, effectively removing it from immediate circulation. What's truly remarkable is the sheer scale of this accumulation. Since the beginning of 2024, COMEX silver supplies in New York have doubled, surging from around 8,000 tons to over 16,500 tons. Now, for the real head-scratcher. When we look at historical data, there hasn't typically been a strong correlation between the silver price, the gray line, and the total silver stocks in COMEX vaults, the blue area. For example, during the 1980 silver run, while supplies were rising somewhat, it wasn't a dramatic surge. Similarly, in 2011, when silver prices skyrocketed, there was minimal movement in the COMEX supplies. But today, we're seeing something unprecedented. For the first time, not only are silver stocks moving vertically upwards in the COMEX, but the price is going vertical with it. This is a new phenomenon, indicating a fundamental shift in market dynamics. So if big whales are stacking physical silver, where is the demand not coming from? The answer, surprisingly, is the ETFs, particularly SLV, the iShares Silver Trust. In just the past 3 days, a staggering 17 million ounces of silver have been drained from SLV. This signals a clear lack of retail demand for the ETF, meaning that while the price is rising, ordinary investors aren't piling in. When retail demand for SLV is low, the ETFs don't have to acquire more physical silver to back their shares, and in fact, silver is being pulled out of the ETF and back into the vaults likely by the same institutional players accumulating it. The only time we saw a substantial increase in ETF demand was during the Silver Squeezed event, where individual investors attempted to drive up the price. But even then, the movement in SLV holdings was modest compared to the current doubling of COMEX physical stocks. This current trend suggests institutional players are bypassing ETFs to acquire physical silver directly. This shift towards precious metals isn't just about silver. It's also about a broader revaluation of assets against real money. Let's look at real estate, for instance, priced in gold. The median price of new U.S. homes, measured in ounces of gold, has now broken below its 2011 low. What does this mean? It means houses are becoming significantly cheaper when valued in gold. The speaker predicts we could see this ratio drop further, potentially to around 5 to 7 ounces of gold for a nice-sized house, similar to historical periods of hyperinflation like the Weimar Republic. And what about real estate priced in silver? While we haven't yet broken through the 10,000-ounce trend line from 1980, the speaker expects this number to fall even faster than with gold. In a scenario where credit collapses and physical money becomes paramount, houses could be exchanged for as little as 75 to 100 ounces of silver for a brief period. It's not just the U.S. The UK real estate market is showing similar signs. UK housing, in terms of gold, is testing the 100-ounce mark with expectations to break through it. And in silver, UK housing has already broken through the 10,000-ounce threshold, currently sitting at 9,122 ounces of silver per home. These are stark indicators of a global trend where traditional assets are losing value relative to precious metals. Why is all this happening? The speaker points to a critical issue in the financial system. The daily repo volume is now over 100% of available reserves. This means that every night, more dollars are being traded in the repo markets than actually exist in the available reserves. This points to a highly leveraged and fragile financial system, where the sheer volume of transactions is unsustainable given the underlying liquidity. It is a clear warning sign that the dollar itself is facing serious structural challenges and its value could be on the verge of collapsing. The implications are profound. When confidence in fiat currency erodes and credit systems buckle, people will inevitably turn to real money, gold and silver. As the dollar falters, these precious metals are set to reclaim their historical role as the ultimate store of value. This isn't just a speculative rally, it's a fundamental reevaluation of wealth. The smart money, the big whales, are already positioning themselves, quietly accumulating physical silver and gold. We are entering a period where mainstream stocks and bubble stocks may give way to a panic into precious metals. The silver price, currently around $48.50 an ounce, could soon reach hundreds of dollars, and that could happen relatively quickly. The opportunity to safeguard your wealth and even thrive during this transition is right in front of us. So, what are your thoughts on these dramatic shifts? Are you preparing for a future where silver and gold are king? Let me know in the comments below, and don't forget to like this video and subscribe for more insights into the world of finance and precious metals.